Cool. So, welcome to Crypto and Assets. As you guys know, every single Saturday, now with the new time, 1 p.m. Central, 2 p.m. Eastern, 11 a.m. PST, we decided to run these calls to help everybody here. Number one, maximize your weekend, right? I know in our amazing community that we just launched. I don't know if you guys are excited, but put a 7 in the chat. You guys are excited for everything that we're launching in Powerhouse to that next level. But I also know that on the weekends, there's nothing crazy on there. That's why we decided to do these calls because we understand that Saturdays can be a good time where you can get ahead, get a little bit more education, a little bit more biased perspective to get ready for the next week. Okay. If you guys don't know about what's going on within Powerhouse, we're very excited for that. If you guys want to know more, reach out to the person inviting you onto this call. But today is going to be straight game on crypto and assets. And the topic today is tokenomics. Well, last week we had our call and we asked you guys if you guys wanted to know more of the numbers, the back end, the understanding of how to find out certain principles and certain things that maybe make a project a good investment, maybe not so good, and also even how to project where potential things can go based on the numbers. So put a 1 in the chat if you're looking forward to that. You're excited to really go into tokenomics. It might be something that you've seen before, you heard about before, maybe haven't gone so much in depth, or maybe it's been a while, okay? But before we kind of get going there, for the people that don't know me, my name is Jesus Skill. I'm 27 years young. I've been in the game for 5 years plus, now 4 years in crypto. And I'm very excited because I started with literally knowing nothing in the market, zero. I was a finance major thinking I was going to learn this, but I knew nothing. And when I first came in, I was just a student of the game. I was on calls just like this. I never missed calls. Like I never did. Even to this day, I hardly do because I realized that learning this skill of the markets is a lifelong thing. I know individuals that have been in the game for 12 plus years and they still tell me that they're scratching the surface and there's a lot for them to learn. And that's why it's always that, repetition of it, if you've heard it before, or if it's new, being willing to be a sponge in this game. Okay. So with saying that, familia, as you guys know, I don't do these calls by myself. But before we kind of go into that and I bring up my brother, John Luke, here are the topics and the conversation we're going to be having today. Number one, we're going to be talking about what's going on in crypto, which is obviously our amazing segment that we have about what's going on in crypto as of the last week. Then we're going to talk about what is tokenomics as a whole, the types of tokenomics, the supply of tokenomics, and the distribution of tokenomics. And we're also going to be kind of hands-on and show you guys certain features and tools that y'all can use to maximize your understanding and take those things to the next level. And also to do these things for yourself as well. Because at the end of the day, we want to help you guys get educated so you guys do it on your own as well. Take the analysis, run with it, and maximize what you guys are already learning. All right. So, with saying that, I do want to bring up my brother, John Luke. As you guys know, we do these together. It's exciting because Crypto Analysis is the first call that we do together. And we've been doing it for a couple of weeks now, which has been amazing. And it's just to start. He's my brother. We met on social media, literally complete strangers around like 4 years ago. And now, we lived together. Now he's living his dream in downtown and I'm up here, becoming a father. So, like, completely wild how things change, but we still are very close together. We work together. He's a big reason why, I've been able to be here. He's a big reason why the goals and things that I've achieved. And he's just getting started with what he's doing. He's excited to pour into you guys and pour into these every single Saturdays. Him taking the time out of his day to do this is honestly amazing. And I'm really excited because the topic today is something that obviously he likes as well as myself, because we're both kind of numbers people. But I'm letting you guys know John Luke is somebody with a lot of experience, a lot of heart, and it's somebody that I would definitely take notes from because it's a lot of info that he's been able to understand, and not just in the crypto side, like in the untraditional side, but also on the traditional side. So he's a lot of different perspective that he can bring into you guys on today's call. So put a 7 in the chat for my brother, John Luke. I'll have him come up and start with what's going on in crypto. And do me a favor, guys. Put some GO. Did I say what's going on in crypto? We said GO. No, WGC. That's what we said, right? So WGC. Put some WGC. What's going on in crypto in the chat? And I'll give it to my brother, John Luke.
Appreciate it, brother. Appreciate it. Buzzing to be on this call. Let's put some tens in the chat for Gil. because Gil is somebody who literally first showed me about the markets within this community. You know what I mean? He helped me get started, and we've been running together for 4 years. Like as he mentioned, you know what I mean? Like from college days, playing soccer in different schools, but have similar background to now being able to level up and live in our own spots and travel and speak on stages. I remember seeing him speak in Arizona in front of 900 people. Like that was a powerful experience. Why? Because I was able to see things from the building foundation blocks, like almost day one, like year one. So it's a very powerful, inspirational thing. And guys, this information is really can change your life, can change your situation without a doubt. We're gonna start off this call with what's going on in crypto as we always do. So BlackRock COO, Chief Operating Officer, he mentioned that Bitcoin and crypto will replace traditional markets. Now, if you do not know who BlackRock or what BlackRock is, they are the largest investment asset manager in the globe. They manage $13 trillion, guys. They manage some of the buildings that you walk in and out, the companies you buy from. You won't even know it, but they manage it. Like they literally manage land in Eastern Europe and like in where things are going on right now. So that's a coincidence in itself. But so he's mentioning that this decentralized space is going to replace that traditional market of where finance is. That's a huge statement. Why? Because that means that you want to be ahead of the curve and follow the money. And if that's where the money's going, that's where you want to be positioned and placed. Second point here, Bitcoin outperforms gold in portfolio allocation. Yeah, this is huge, guys. I'm actually going to share my screen. There's something which I want to show you guys about Bitcoin outperforming gold in portfolio allocation because let me show you over here. So what we have is it says here, over the past 12 months, adding 10% of Bitcoin to a 60/40 portfolio, boosted risk adjustment returns by 90%. Basically, to put it in simple terms, this has a significant more profit than if you were to invest in gold, which is a more reserve, more stable, I guess you can say, asset class to invest in. That's powerful because a lot of people have fear or scarcity with Bitcoin with its volatility. But over a period of 12 months, which isn't even that long, it still performed better. What does that tell me? Well, over a period of 3, 5 years, it's going to perform even better than the 12 months, which is incredible. So when in doubt, zoom out. That's what we say, right? Because you look at the charts for the past couple months, it might scare you. Well, if you're in doubt, zoom out and look at a bigger time frame, look at a bigger time scale, and you'll still find that Bitcoin is one of the highest performing asset classes in the past 10 years over traditional markets. I work for an investment bank, and so we have our own capital and we also trade capital as well. And one thing I noticed is that highly wealthy people, guess what? They're traditional, but they're also in Bitcoin. They may not be crypto native, they may not be crypto advocates, but they're Bitcoin advocates. And that's a big point. This is why we talk about dollar cost averaging, which is DCA into Bitcoin or into layer one projects on a regular basis so that you can grow your portfolio. And yeah, if we go back to, I'm going to go back to the PowerPoint here. I've actually got it up. And we're going to move on to the other pointer. So in the past 12 months, 27 new companies have added Bitcoin to their balance sheets. Now, 130 companies, public companies, collectively hold over 810,000 BTC, guys. Why is that huge? Because let's just do basic maths on that. 810,000 BTC times, let's say 100K. Let's just say it was that. What's that number? Wow, like on my phone, it doesn't even allow me to have so many zeros. 8.1 E10. That's like 10 zeros. So you're looking at probably in the billions, which is huge. That is the amount of money that these companies are holding in Bitcoin in itself. And let me just pull up an article here that actually touches on it because it was pretty mind-blowing. Let's have a look over here. Incredible. Incredible. So I'm going to move on to the next one. Ukraine advances crypto reserve bill to include Bitcoin in reserves. So we spoke about strategic reserves. You guys know what that is by now. Simply, it is the reserve pot of funds that a government or that an entity may have in order to protect themselves in unexpected, unpredictable times. Basically, in times of crisis, governments and states have a pot of money that they can draw from to, rebuild infrastructure if there's like, a natural disaster or like a war or something crazy. And so Ukraine, obviously, as we know, they're in a war. They have advanced that crypto bill. So it's looking like very soon, most likely this year, that would be approved. And they can have that Bitcoin growing as something that they can go to in times of war, whatever it is. And the National Bank of Ukraine has been the ones who have been advocating and promoting to actually have this happen, which is a big deal. The last one, Senate passes landmark stablecoin bill. You guys heard about us speak about the Genius Act last year. This is important. Why? Because it's going to bring some regulation towards having stablecoins for the country and for the banks and the institutions. And there was a 68-30 bipartisan vote. So that's decisive. 68 over 30 people actually voted for this to happen, marking it the first federal regulatory framework for stablecoins. Having that framework is key because companies are scared to actually put that on their balance sheets because they don't know how to work with it from a tax perspective. If you have a framework that has regulation, they will then implement that into their businesses. That's important because it brings more money into the crypto market, and more money in the market raises the market cap in general for crypto, and it then brings more adoption into the domestic and international space as well. So these are the things that have been going on in crypto in the past week. It's basically our regular weekly update. And now we're going to touch on what are tokenomics. So we mentioned that we want to speak on tokenomics this week. Why? Because this is a undervalued, underspoken about topic. Just like stocks, you want to understand, the P&L. You want to understand certain equations with it when you go onto yahoo.com. Well, guess what? The same thing in crypto, just different terminology. Max supply, total supply. And that's what we're going to touch on here. Tokenomics is the study of economics of a crypto token, from its qualities to its distribution to its production. They can be exchanged and hold a certain value, but they are a completely different asset class. So let's move on to the next slide, which is going to be the types of tokens. So one, we have layer 2 and we have layer 3 tokens. And so layer 1 tokens, what are they? Layer 1 tokens are typically base protocol / blockchain types of projects. So our layer 1s are going to be our Bitcoins, our Ethereums, our layer 1, which is basically like the Google Play or the App Store type of projects. And then as we get to layer 2 and layer 3, those are kind of like the apps that run through Google Play or through the App Store. And so represent a specific blockchain and are used for other services like investments, storage, purchase, and they settle every transaction on their network, which is Ethereum. So I like to think of it as the Apple Store or the Google Play of that blockchain. Now, layer 2 is a little bit more interesting. This is really where scalability is its main purpose. Now, what do I mean by scale? Well, in these projects, guys, they need to have apps within them, tokens within them that can help them grow because they want to be able to have hundreds of thousands or millions of people utilize that network, transact on that network without the network failing, without having problems. And I remember in 2022 summer, when I was community managing a Solana NFT project, we ran on Solana. Our developer, our blockchain developer was building through the Solana blockchain. And he mentioned to me, he said, hey, like Solana, like it's kind of unreliable at the time. What does that mean? It means that the network fails sometimes. Now, in the banking world, in the centralized finance world, the banks aren't just going to like fail. Like you're not going to like send a wire and it's just like everything's down. The entire US network is done. So that's a positive in the traditional markets. But in the decentralized markets, guys, certain blockchains are cheaper than others, faster than others, slower than others, more expensive than others. And some of them are less reliable than others. And Solana was one of those ones. So you want to have an ecosystem, a layer 1 project that actually can scale and move large amount of funds at a quick transaction speed. And so that's the purpose of what layer 2 tokens are for. They're designed to help scale decentralized applications in a network. And so Polygon is an example of that. Decentralized is a term that some of us may know or may not know. I want to ask in the chat, put a 10 in the chat if you know what decentralization is, and put a 5 in the chat if you don't know what decentralization is. Put a 10 if you know, and put a 5 if you don't know. Let's have a look. And Gil, remind me, is it you sharing? I'm pretty sure it's you sharing, right? I think it is.
Yeah, yeah.
Sounds good. Appreciate it, bro. Cool. So we have 10, 10. They know. One or two don't know. Okay, I'm just gonna like explain, right? Because it's useful for everybody to remember. So decentralization is where there is no central authority, there's no middleman, there's no intermediary. All of those are synonymous terms within a transaction. So in crypto, it's peer to peer. It's going from person A to person B. In the centralized market, our Chase, our JP Morgan, our Bank of America, there is a middleman, the Federal Reserve. There is an intermediary that is overseeing every single manual transaction that occurs. In crypto, we don't have that. And there are pros and cons within that, but I'm not going to dive in that on this call, but I just want you to know that. So an example of a layer two project, guys, is, as I mentioned, Polygon, but also we have Optimism, which is on the Ethereum side. And basically it allows the project to be faster transactions and also to have cheaper transactions. And that goes back to the scalability purpose of layer twos. Layer three tokens. These are application specific tokens. Their purpose is to be so what we call a dApp, like a decentralized app often for that layer one project. So for example, we have Uniswap. Uniswap is a decentralized app and exchange that can be utilized. For example, we have the Graph, and the Graph is an indexing protocol that basically helps decentralized apps with their data. We also have Helium, HNT. Helium, guys, is a layer three project that actually allows decentralized wireless infrastructure. My friend back about 2, 3 years ago, he used to live in Dallas, and he had basically like helium towers, which allowed people to actually have helium as their phone network. Just think about that, like a decentralized network to utilize on your phone. And anyone who would hop on his Wi-Fi, his helium Wi-Fi, guys, he would get crypto tokens in return for other people utilizing his decentralized wireless connection. That's wild. Put a 10 in the chat if you're like, that's pretty crazy. Like, crypto has a real use case. And for one of these projects, it's decentralized internet. And you're telling me if I have helium towers in Dallas or in Arizona or in New York or in wherever you are, I can actually get rewarded for people I don't even know using my wireless network? That's true. So that was a function of a layer three project. They are app specific and they are service specific. Put a 5 in the chat if you guys are with me so far. Like, you're getting value. This is making sense. Layer one, Ethereum, Bitcoin, those types of projects, Solana, the main caps, right? The projects that are a little bit more stable, lower return on investment, but the projects that are really the foundations of crypto, and then layer two scalability, layer three app specific. Let's move on, and we're going to go on to part two of the types of tokens, fungibility. This is where we start talking about NFTs and things of that nature. Fungibility is the property of assets to be interchangeable for another of the same kind, such as gold, right? Such as gold. The valuation remains the same, whether you're in Switzerland, America, China, England, wherever you are, and it is interchangeable. A gold bar is a gold bar. Like, it's not going to be any different unless it has different materials within it, and unless it's like a compound that has different metals within it. Non-fungibility tokens. Well, if we know what fungibility means, that the asset, the property is interchangeable, non-fungible has got to be the opposite. They are unique and they have different values. It's the tokenization of assets such as artwork, furniture, real estate NFTs. And so we spoke about these projects in the past. Non-fungible, such as Pudgy Penguins. It's an NFT project. I used to be in an NFT project called Gambling Apes. And these gambling apes, they didn't have much utility per se, but one of the things that they did have is they had a community aspect, which actually allowed me and my friend from England to go to Miami and to meet up with other gambling ape members and basically mastermind and like create business together. And we got to go clubbing in Miami for free, like bonuses that were part of being a part of this NFT project. There's another NFT project. It's called RumbleKong. And RumbleKong is on the Ethereum blockchain. And it's these like monkey, like kind of like monkey, like donkey things, right? But it's pretty cool. And so the utility behind this project, because there is some, is that it's 3v3 basketball in the metaverse. So if you own a Kong on this Rumble Kong NFT project, you're able to upgrade the stats and play basketball and earn tokens in return, earn crypto in return. And so that project has real utility in the NFT space. Now, you might ask yourself, what's the difference between this monkey and this donkey? Like, what's the point? What's the difference between this giraffe and this squirrel? Well, the difference is this, is it's non-fungible. So every single piece of artwork has a unique code behind that artwork. That unique code is what differentiates one monkey to another monkey. And that's important to understand. People say, can't I just screenshot an NFT and it's going to be mine? Like, what's the value in it? No, because there's a unique code behind it. And if you were to trade it, sell it, buy it, whatever it is, exchange it, then that has to go through the blockchain technology that cannot be altered or tampered with from sending from person A to person B. That's what makes it unique. Tokenizing it is key. Now, security tokens. Security tokens are digital investments contracts that represent ownership for a piece of an asset. This is what the SEC might class as securities. And we understand that the term securities is a very sort of like quasi controversial term because the SEC, the Security Exchange Commission, who regulates the financial space in America, they want to securitize certain NFTs or crypto projects just so that they can get them under certain regulatory or tax purposes. But that is the controversy in crypto. Like, what's a security? What isn't? Is this stablecoin a security? If it is, they have to abide by a set of completely different governmental rules than if it's not a security. If you're not a security, you're more flexible. If you are a security, unlucky, you're under the SEC's wing and they may investigate your project. So that's a big controversy in the space. Utility tokens, they are issued through an ICO, an initial coin offering, and are useful in capitalizing a network. Utility tokens have utility, obviously. An ICO is basically where a project launches from the ground up and it is now in the public place for people to buy and sell publicly. If you're in the stock market, you have an IPO, an initial public offering, to get it listed on the New York Stock Exchange or the London Stock Exchange. But in crypto, it's the ICO. Basically, it's the equivalent, but for the crypto space. So that's part two of types of tokens. Supply of tokens. I feel like this is perfect. I feel like Gil can definitely dive into this a little bit. And if you want to chime in, bro, this is a good slide.
For sure, guys. Well, first of all, put a one in the chat if you guys are really getting everything that Jean-Luc is talking about. I know for some of it, it might be going over your head, but I'm letting you guys know that this is like the real stuff, like let's talk about like crypto. People see crypto just as coins. Guys, it's way bigger than just coins. It's an actual completely different marketplace that has been here and is now taking hold. And if you guys don't know it or not, your favorite bank, your favorite institution, or the things that you're already using on a day-to-day are already taking action on learning these things. And guess what? They're barely understanding any of it that Jean-Luc just broke down. So the reason why it's important is because at the end of the day, knowing this type of things makes you more knowledgeable and helps you make the right decisions when it comes to certain projects. Understanding it from the back end. So I hope you guys are taking notes. But I want to go kind of straight into now, which is a supply of tokens. Now, what I want to do actually, to give you guys more of a visual as well, is I'm going to be talking about this, but I'm also going to be showing you guys where you guys can see this, okay? So what I want to show you guys now is a practical way to look at really the supply of tokens, and more specifically, like this is what we really kind of go into when it comes to tokenomics, right? There's a couple of things that we've talked about before, which is going a little bit more depth. The first thing I want you guys to know is that CoinGecko is where you can come in and look at all the back end of numbers when it comes to crypto, right? There's a couple of key numbers here that is important to realize to understand kind of what this project is at, and really it can make you make a judgment if it's a good project or not, right? So the first thing is this, something called circulating supply, okay? So when you click on a crypto, for example, Ethereum, this number is going to be right here. Now, what this number represents is very simple. It just means the number of tokens being issued and in circulation, meaning how many Ethereums are there right now in the blockchain. there is 120,720,158 tokens that exist. Now, is that going to be the max ever? No. Ethereum actually has an unlimited max supply, meaning it's releasing tokens as well. But what makes the difference with some projects and some other ones that have unlimited that make it a good or not good, Ethereum has something called a burning mechanism. Now, this is an extra thing, but it's important to understand that because we might be seeing Ethereum saying, okay, well, this is unlimited. Isn't that like the dollar, right? It's just being printed. But it has a burning mechanism where Ethereum, every time it's being used, there is Ethereum being burnt every time it's being used. So what it does, it hots it down from being inflated, right? It's like a deflationary system that is being used. But it's important to know this because you know how many tokens exist, because how you even get the price, literally, it's market cap divided by circulating supply. So it's the amount of money that is in this crypto divided by the amount of tokens. That's how you gain this number. Put a 2 in the chat if that makes sense. All right. Put a 2 in the chat if that's making sense. Now, the next thing I already talked about is total supply. Sometimes it's the same amount as this. Sometimes it's not. Basically, this just means is how many have already been created and minted. But sometimes there's a certain amount of number that's minted, but not all of it is in circulation. So just be, quote unquote, reach out and see what the two numbers are. But circulating supply is, in my opinion, the one that matters the most to understand kind of price and everything, right? And then we talked about max supply, right? So I'll give you guys another example on here is Bitcoin, right? Bitcoin is max supply is 21 million ever, right? Right now, there's 19,881,909 million tokens. So what does that mean? That means there's more to be minted. So the full supply is not out yet. Majority of it is, but it's not out yet. So that means there's more Bitcoin's going to be minted. It's a slower process of this. So it's going to take a very long time, but it is important to understand this. But it's also key to know that in Bitcoin, there's only going to be 21 million. And we talk about this over and over again, but guys, there's not even enough millionaires to have one Bitcoin each. Like there's more millionaires than 21 million. So think about it. If a millionaire, this is only 100K. If a millionaire bought a Bitcoin, that means everybody would have Bitcoin and you can only buy it through them. Eventually, that's going to happen. I'll give you guys an extra twist to this. When that happens, there's going to be a point in time where exchanges, your Coinbase, your Kraken, your crypto.com is not going to have access to Bitcoin. The only way you're going to be able to buy it I'm talking about the future because we're thinking about long term, is through the supply, is somebody who actually owns it, right? So obviously there's going to be companies, exchanges probably, they're going to get regulated and do their thing to own your crypto. But this is why, this is like a clicking moment for me. This is why banks are looking to get licenses now. They're already doing it to be like exchanges. Because guess what they're going to do? They're going to go on they're going to go on commercials. They're going to do billboards. They're going to have it on their sign in their bank and saying, hey, if you lend me your Bitcoin, I'm going to pay you this. And guess what they're going to do with your Bitcoin? They're going to lend it out again. They're going to do the same thing that they do with the dollar, but they're going to do it with Bitcoin. And that's something that is important for us to understand because when you're accumulating something like this, you want to be the whole, how can I say this? You want to be the actual owner of it. Because unlike the dollar, the difference between the dollar and Bitcoin is that the dollar has an unlimited supply, while the value of it is actually going down, while Bitcoin is actually going to be going up because the supply goes down, the demand is going higher and higher and higher and higher, right? Bitcoin is literally like the digital gold that is coming very soon. So looking at this is very different, right? You see circulating supply and total supply being the same. You see max supply, meaning there's more run to it. There's more tokens that are going to be released. But as you guys can see, we have the market cap here, okay? So these are a couple of things I want you guys to know. Now, you can also look at things like 24-hour trading volume. It's not that important. Like, it's not the end of the world. But you can see on here how much volume there is in each block, each crypto on a day-to-day basis. So right now you can see there's a lot of movement in Tether, which is pretty normal. You can see a lot of movement in USDC, right? You can see that there's, the most in Bitcoin when it comes to normal tokens, and then you have Ethereum, and then really you have, XRP as well, right? And there's a big jump between BNB, for example, and then you have Solana, which this is wild. Last thing I'll say is this. Right now, Solana has more of a volume than even XRP. Even though Solana is lower, right? It's lower in market cap, right? There's more volume. And I'm going to tell you guys a news flash on why. The reason why is because Solana is being used a lot. And this is not, I don't know if it's not a good thing or a bad thing. It just means there's money being moved, but it's being used a lot in meme coins. Like really, it's becoming the center of meme coins. So again, at the end of the day, I'm not super keen on meme coins, but I can tell you this, there is a lot of money in that place, and there's always going to be money in that place. So my game is to have Solana, instead of having to work with all these crazy memes that we don't know what they're going to do, but we know right now, as of right now, it could change. Solana right now is the supplier of that world. Like put a 1 in the chat. You've been seeing that. You've been seeing the meme tokens in Solana. So as long as there's money being there, Solana is going to be a part of that road, just to be honest. And meme coins, in my opinion, I'm just saying they're not going anywhere. I'm not really pro meme, but I'm just letting you guys know there is going to be money there because people love gambling. People love all that type of stuff. That's a great way to market, to do whatever. So there is going to be movement in there. It's just understanding how to be a smart investor, right? And for me, it's to be smart, is to be a part of the whole blockchain instead of trying to pick the right one, okay? So I hope that kind of makes sense. But yeah, bro, John Luke, if you want to touch on the next thing, we can go on and go there.
Yeah, for sure, bro. Actually, I was gonna that's like big game as I was listening in. And if I just share my screen real briefly, I want to show you guys a couple of things real quick. Let's have a look over here. Okay, cool. So for example, this is Uniswap, okay? Honestly, adding from Gil's points, which is really key, and like I would screenshot this page if you don't have it. Like I'm gonna give you guys 3 seconds, 5 seconds to screenshot because these are the calculations and the equations and the definitions you want to know, you want to have on board. So when you go to do your due diligence on a project, you have this, so you have an idea. All right, I'm gonna move it in 3, 2, 1. Now, Uniswap, for example. One of the things that's key is understanding max supply, like Gil spoke about. And so some projects are deflationary, some projects are inflationary. Ethereum is deflationary, as Gil mentioned. Now, with Uniswap, there's a $1 billion max supply, right? So it's pretty high. It's pretty high. However, it's okay because there's actually utility within the project. And guess what? The trading volume is high. Trading volume in 24 hours is important because it shows you how often is that project being used. Think about it. A project can have 1 trillion tokens, but if it doesn't have a use case that actually adds value to its blockchain and ecosystem, and if it has a low 24-hour trading volume, that's just a project with a high supply. It doesn't add anything to it. Actually, if anything, takes away from it. And so you can have a project with millions of tokens, but if the coin goes to $1, just think about it. Like if it crashes all the way down to $1, then you are probably going to want to sell your assets. But it's all about liquidity. So ask yourself, millions of tokens, it falls to $1, hundreds of percent. Where will you sell to? Like who will you sell to? Because no one else is on the other side. We understand that if we're buying, someone has to sell on the opposite. If we're selling, someone has to buy on the opposite. But if there's no liquidity because the trading volume's low, you won't be able to sell your tokens. Like you can't get anything back. So I want you to understand that, like, that's how important understanding tokenomics can be. It really comes down to the liquidity and how actively people are trading within that project. So I want to touch back on the slide, and let's move on to the final slide here. Distribution of tokens. So distribution of token, guys, there's really 2 ways of doing this. The first way is pre-mining and the second way is fair launch. And so this might be new information for you, whether you're beginner, intermediate, or advanced. So I recommend taking notes. And so pre-mining is where the portion of tokens are mined, created, and distributed before it's launched publicly. What does that mean? It basically means some of the tokens within the project are sold and given to buyers in the ICO. This purpose is to reward founders to reward the developers, the miners, and the early investors. That's the main goal of projects that want to pre-mine. It allows the people behind the project to get some form of reward before everybody else publicly gets in. I mean, think about this in stocks, guys. I don't know if you know this, but if you're well connected and you're very wealthy, like a high net worth individual, you get told about stock IPOs before everybody else. You get invested in projects before it's even IPO'd, before the public can buy in Google and Amazon and Apple. Just think about it. There were literally people, investors, institutional multimillionaires, billionaires, who invested in these projects because they got the phone call or got the text like, hey, there's a stock being IPO'd. You can invest before it even gets to the public. These are the type of private circles I'm talking about. And guess what? It happens in crypto too. You know how I know this? Because the NFT project I was behind, we had exactly that. We had early investors that we were able to take, use their funds and so that they can get rewarded tokens before it's publicly out there in ICO. That's how useful it is. The second method is a fair launch. And it means what it says on the tin, it's fair. It's where crypto is mined. Mined basically means, guys, just developers who are solving complex algorithms to extract Bitcoin or whatever the crypto project is, and bring that into supply. That's just what mine means. And so it's crypto that is mined, burned, or owned or governed by the community from the outset. So everybody has an equal and fair opportunity to invest in a project. It's usually decentralized and there's no private allocation. So, no early investors, no founders are getting this secretive private allocation of tokens before it's publicly available for everybody else. That's what a fair launch is. So these are two different methods of distributing tokens that projects choose to like delve into. And this is something you can look at in the white paper of projects, to understand like what is the foundation of how this project came about, who actually owns the tokens, and how did they own them. Okay. So this was pretty high level, but we have a mix of difficulty on these calls when it comes to the knowledge. Sometimes it's more basic, sometimes it's more portfolio building. Last week we were on the charts. This week we dove into tokenomics pretty damn deep in the past 40 minutes. Guys, put a 10 in the chat if you feel like you got value here. Put a 10 in the chat if you're like, hey, like this was useful. I want the recording. Gil, brother, I don't know if you have any other value or anything else to add. I think it'll be great if you want to chime in there, bro.
For sure, for sure. No, definitely like Jean-Luc said, every single call will be a little bit different. Sometimes more advanced, sometimes more basic. This was a little bit more advanced. I would say more intermediate. But I definitely want to touch on a couple of things before we end the call, right? Number one is this. Obviously, we know CoinGecko. What I wanted to give you guys some like visual representation of what this can look like and what you can kind of start doing to understand kind of the back end is here on CoinGecko, you can actually see the different chains, right? So if you go on CoinGecko, you go here, you go on chains, right? You're going to be able to see the different blockchains that actually exist and what's in it, right? So I was all going on here while we're on the call, and you can see the different chains. So if you're confused, like what cryptos and what chain, well, literally you can just go on here, cryptocurrencies, and go on chains. You click on, let's say Ethereum, and like, okay, what crypto is in Ethereum? Meaning you can only transact within Ethereum. Remember, every blockchain is independent. Yes, you can go from chain to chain, but within the chain, you need to stay in the chain to be transacting in it. So, for example, right, Jean-Luc talked about Uniswap. It's one of the decentralized exchanges. Think about like a Kraken, like a Coinbase, but in Ethereum, where it's used decentralized. So it's a way you can exchange currency within the ETH network. Now, Uniswap is only used in ETH, not in Solana, not in Polkadot, right? Not in all these other ones, only in Ethereum, which is important to know, right? Then we have projects like Aave. Aave is a DeFi protocol. We might talk about a little bit later where you can lend, borrow, stuff like that. And it's, again, only in the Ethereum blockchain, okay? So you can come in here and see, what cryptos are in what blockchain, right? We talk a lot about Ondo. Ondo is a project that is in Ethereum. So if you want to gain Ondo and you have your crypto maybe on your decentralized platform, right? You can exchange it on Uniswap because it's a decentralized exchange, and you can exchange Ethereum for Ondo. Okay, so hope that kind of making sense. But I definitely want you guys to make sure you guys do this. So whenever you look at a crypto, whenever you guys are on the sessions, maybe with Max Otero, or I know we're about to get the app launch where there's going to be a lot of exciting things and a lot of cryptos talked about. You're like, how do I get it if I can't get it on exchange? You can just come on here, go on there and go see maybe on Solana, right? Is it on Solana's network? And when I was talking about meme coins in Solana, you can see this, right? Because I'm on here, right? And I've seen this before, but I was on here today and I was like, okay, like what are the biggest tokens in Solana? And obviously you can see Chainlink. And if you guys don't see this, Chainlink is in all of them because Chainlink is actually used in all of blockchains now. That's why I think Chainlink is so bullish in my opinion, because it's used in every single blockchain. But you can see like what are the next ones, right? It's official Trump token. Then you have Render, amazing project, now in Solana. You have things like Jupiter, which is a DEX similar to Uniswap, now in Solana. But then you have Bonk, right? You have Fortcoin. Shout out to the boys, the boys always talk about Fartcoin. But anyways, you have different memes on here, right? You have Punchy Penguins, right? But you have good ones as well, like Helium. So you start to see what is being used the most and what has the highest market cap in these exchanges. So yes, it's a little bit more advanced, but it's important because I want everybody here to be educated, right? Like put a 5 in the chat. You actually want to be educated and not blindly investing, blindly doing things, but actually know what you're talking about so that you're confident. And when somebody asks you about, oh, you're in that crypto thing, and you say, yeah, you actually are confident because you know the terminology. You understand these things. And I'm telling you guys this, if you understand these things, you are smarter than the traditional banks right now. You're smarter than the institutions right now in this space specifically, because for them, it's completely new. But we're ahead of the game because we've already been studying this and it's important to do that. Now, the last thing I want to bring you up, John-Luc wanted me to bring this up and we found it, is comparing things, comparing numbers, and seeing where the potential of things can go. So this is a website called 8marketcap.com, and you can come on here and compare asset classes, right? So if I go on here and I go on compare, we're going to compare to give a projection because we know that BTC is the gold of crypto, and crypto is just getting started. What would happen when Bitcoin becomes the same amount of money that's in gold, right, is in Bitcoin? This would put Bitcoin at $1.1 million per Bitcoin if the market cap of Bitcoin matches gold. Now, is this going to happen tomorrow? No. But I'm letting you guys know this now. There is a potential of that happening in the future. Because as you guys can see here, the number one asset is gold at $22 trillion. But I'm letting you guys know Bitcoin is already at number 6. It just beat Google actually. But even think about it the other way, Microsoft has a bigger market cap than Bitcoin. That's how early we are, like super early. Okay. And if people start to treat Bitcoin, which is coming, as the digital gold that it is, imagine when it hits the 20 million, the 21, the 22, the 25, the 30 trillion dollar market cap, which I'm not saying is going to happen tomorrow, but I'm talking about the 10, 15, 20 years, because there's a certain point where gold was at 2 trillion. Gold wasn't always 2 trillion. And if this really change happened when there was the ETF launch in gold. So we know that the Bitcoin's ETF already been launched. So imagine, again, the next 5, 10, 15, 20, 30 years. Okay, so you can come on here, compare a lot of things and see things, right? You can even compare cryptos. So if I compare here, last thing I'll show is this, is you can compare Solana versus Ethereum. We know that Solana is looking to be like Ethereum. If Solana's market cap reaches Ethereum's market cap, Solana will be at a price of 546, which is very reasonable, super reasonable, right? Right now we're sliding around 100. So looking at this is kind of key. Now, if you go look at Ethereum and knowing that Ethereum is the second biggest crypto in crypto, right? And you compare this with Bitcoin, this will put Ethereum at $16,000, almost $17,000 per token, guys. So when Bitcoin is maybe at a 5 trillion, 10 million market cap, Ethereum can be at a 2 trillion market cap, which this puts it at a crazy, crazy potential, because right now Ethereum is at 2,000, literally. And I think, just to end this call, I've been saying this since last week. since we've been talking on the charts, I've been saying this. I'm not a wizard, but I'm letting you guys know I can see Ethereum coming in here because I can see Bitcoin coming in here like we've been talking about, right? So just I'm saying there's a lot of crazy things. Believe it or not, I was on TikTok yesterday. I'm telling you, this is for a reason. I'm saying this. I'm not on TikTok often. I'm not on TikTok, but yesterday I was scrolling and I got myself scrolling and I was like, you know what's crazy? And maybe y'all can relate. There's a lot of negativity right now in the world. Put a one in the chat if you see everything about war, you see everything about this. Like, I was shook because my Instagram is just like positivity. Like, I have literally no negativity on my social media. So I was surprised. I was like, this is what the average person is seeing. Guys, this is could be a black swan event. Literally, this could pull the market down to then do something like this. I'm not going to say it's going to be like COVID, but it could be something. It might not be as big, but it could be something that could bring this market because this is where I see things going. It's so obvious. Like I've just seen things over and over and over and over again. So right now, me seeing ETH come here is just so obvious. I already broke liquidity and it wants to rebalance itself before it goes higher. So in my opinion, to end this call, ETH is the biggest sleeper that I see right now in my opinion, because it still hasn't reached here. And seeing it at $2,000 again, guys, gives you the opportunity of a potential because ETH is the biggest player right now. Nobody's talking about it, but I'm letting you guys know this. It's the biggest player that institutions are playing. It's Ethereum. It's not Solana. You know, it's not the other ones. It is Bitcoin as well, but on top of Bitcoin, it is Ethereum, fam. So we're saying that. I just wanted to end the call with that. That's it for me. I don't know if there's anything else, John Luke, you wanted to touch on. But we'll end the call from there if you want to end it
All good,
out.
bro. Yeah, no, that was solid. I know that was a breakthrough for some people in the chat. Also seeing the potential of ETH and where it can retrace back to. So yeah, I think that's perfect, bro.
Perfect, perfect. So we're saying that, familia. Put some sevens in the chat if you got some value today. Like you guys know, we've been posting these on YouTube. So if you want access to the link, reach out. We're sending in the Powerhouse Crypto Chat channel is where we're sending it at. So I'm super excited for what's to come. We'll talk about next week. You know, I wouldn't keep it a surprise this time. So this time we'll talk about what we want to talk about next week. Who knows? There might be a black swan that makes things exciting and we talk about it. But with saying that, familia, I highly advise to, invite somebody on next week's call because we're just getting started with this. A lot of exciting things are to come. And if you already know, guys, right now, we're doing something very special with Powerhouse. And if you're a guest on today's call, just know the best is yet to come. If you're in Powerhouse right now, we'll just know the best is yet to come. We got exciting things coming, and I'll see you guys next Saturday at 1 p.m. Central, 2 p.m. Eastern, and 11 a.m. PST, guys. See you guys in a bit. Peace.